we need to talk about earnings and stellar earnings at that, because the execution from transformers and rectifiers was very, very good. And I think before we get into the conversation, let's get in Varsha, my colleague, to talk about what the quarter was like and what is it that we should be expecting from the management. Varsha?
Yeah, thank you so much for that. So, overall good set of numbers that the company has posted, and there was a improvement in the gross margin, which was led due to, pricing power and of course operational efficiencies that the company has. Strong operational performance and higher other income attributed to, spike increase in PAT growth. Other income, if you see, was 20 crore this quarter versus 4 crore in Q1 FY25. Exports are about 10% of overall revenue and are expected to remain similar. Onto the order book detail, the unexecuted order book stands at around 5,246 crore, which is at 2.6 times of FY25 sales. And order inflows, if you see, fell 4.7% year on year. Now this is due to because companies focus on high margin orders. New inflow order, if you see, stand at around 665 crore, and inquiries under negotiation is around 18,000 plus crores. The capacity expansion of CRGO processing unit has just started, and the construction is underway when it comes to backward integration units. And onto the management commentary, what is management highlighting? If you see, they're optimistic when it comes to achieving $1 billion in revenue within 3 years, and they aim to become net debt free in the next 18 to 24 months.
Thank you so much for that, Varsha. In fact, Chanchal Singh Rajora, the Group CFO and Advisor of Transformer Rectifiers in our studios this morning, a very healthy set of numbers. So,
first of all, morning to all of you.
Good morning.
It's good to be here always. It's good to be here always.
Yeah, no, we love it when you're in the studio because we always have a better conversation and a deeper conversation. What has worked this quarter? Let's start with that.
In fact, Tamanna, actually, we were hoping to do good also this time. Much better than this. Right?
Oh.
Yeah.
You were expecting the numbers to be better than this?
Yes, much better than this. But yes, we have done a good numbers. And as you see in last 3 quarters, we are doing quarter to quarter, we are improving not only our revenue numbers, but also we are increasing our profitability on every quarter. And we hope that this is going to be continue in quarter. Though quarter one is always a little slow, but yes, now we don't compare ourselves to year, we try to compare our to quarter. So we're trying to better ourselves in those way basically.
But it's a seasonal business, right? So you typically have a YOY comparison just showing what.
Yes, that's right. Generally, the quarter first and quarter two are slow in this industry. And quarter three from things start picking up, and quarter four is always the best.
Sir, so clearly the bottom line performance is great. You've got a margin improvement. You've said that work is on to improve the margins as well. So when you say that you were expecting the numbers to be better, you're talking about top line growth, and what are the factors that could lead to a better performance, say Q2 onwards?
I am a Marwadi, Rajasthani guy. So I first concentrate on the bottom line. Right. Then I go on the top line, because ultimately that comes into my home, right? But here I am talking about top line and bottom line both. Okay. Look, understand, if my top line is increasing, definitely my bottom line is strengthening more. Yeah. So that's how we are working. And I've been telling since day one that my concentration is 10% PAT. Without any other income. And I'm focused and I'm working on that side. And the company is working on that side completely.
So, just trying to understand, you are, from whatever notes have come out, they're saying that now you're being picky about the order inflows, and which is why the order inflow may have come off a little bit, but it is resulting in gross margin expansion. So as you look at the next 3 quarters or the next 7 quarters, would the story be of gross margin expansion with stable order flows and not very large order flows, and therefore margin expansion and bottom line expansion?
Neeraj, basically is that look, we are basically in the best of our time. We're not seeing this time in past. All in previous years we are just in pain. Right? So now when the things are in our favor, we are trying that how we can maximize both the things, right? But in other way, we are not greedy that we need to have the gross margins increase and now. Gross margins has reached to the maximum level.
Okay.
But now what we are more focused on the execution side, we are more focused on the better payment terms, and we are more focused that how we can deliver the product in time, right? It coming to next 3 quarters, if you see in last Q4 meeting, our MD has said that this year we will be concluding around 8,000 crore rupees of order book. From that we will be nearer to that, right? And in next 7 quarters also we will be steadily growing into that. And as far as the profitability size is concerned, that yes, we have reached to a level where we will not go down, we will little bit better than this.
So 16.7, 17% range, margin range continues, sustainable?
Tamanna, this quarter we have done 18.5.
Yeah, OPM, operating margins, yeah.
So our EBITDA is 18.5,
Yeah.
so it should be in that level.
Okay.
Yeah, it should be that level. More thing is this, I don't want my PAT should go beyond 11%, and we are focusing on that %.
Okay. You said just a short while ago that so far we are limping, but we are at the best of times. What has fundamentally changed? Is this environmental factors, or is this strategy which is now culminating in what you are saying? Just trying to understand that view.
There are 2 things, right? The first thing is this, the demand of the transformer, demand of the power, which is increasing day by day, right? The grid expansions are taking place, other factors are coming up in a different manners, renewable energy is coming up. That's the globally you see that phenomena which is taking place, right? Everywhere, not only in India, but everywhere. As far as the transformer rectifier is concerned, is that the product range what we have developed in the lean period is paying off us. The products what we have developed in the lean period, our chairman's vision that this is going to be happen in future is actually paying off us, right? So where on the special duty transformers, we are masters into that, we are leader ahead than those people. So that is paying us. The thought process of our management that yes, we should do the backward integration. We started our backward integration way back in 2012 or 13. That is now paying off us. And that is the change, and that's what keeping us ahead from the others.
So a couple of questions. Second quarter, there's capacity expansion that is going to come on stream, as I understand it, in your Moraiya unit.
No, the Moraiya unit expansion will take some time.
Oh, okay.
We just started it now. Yes, the Changodar unit expansion, which we started last year, has already started. The first phase has already started giving the commercial production.
Okay.
Right?
So when will the Moraiya unit
Moraiya will take some time. By the Q4 actually it will come, because it is the extra high voltage transformers which is basically expansion is coming up, which is basically used for the power evacuation system. So that's what we are focusing into.
Okay, so you are simultaneously building capacity, sir, and you are reducing debt. You aim to be net debt free. When will that take place?
I'm expecting is that in next 18 to 24 months we should reach that level.
So,
Yeah.
I remember the last time that we spoke when you were in the studios, you had given some fairly strong targets / guidance, and not just for FY26 but for 27-28 as well. Would you stand by those numbers? Would you care to revise them slightly? Can you tell us a bit about it? Because your margin expansion is happening slightly ahead of what you had spoken about.
Look, as far as the revenue target is concerned, we are still on that numbers.
For FY, is there a number for FY28 in your mind as well?
Yes, FY28 basically we want to reach to the 8,000 crore rupees number, and that's
Right.
where we are working right now.
Okay.
The ultimate goal is to reach there.
Got it.
And we are working on that very swiftly, and we are hoping that we should reach that numbers.
Okay, so that 8,000 crore, coupled with the fact that you want to maximize this good cycle right now, where is the expectation on the margins out there at the same levels? And would you reach that 8,000 crore number with the same net profit margins as well that you have right now in Q1?
I think I will be bettering the net profit margin.
Okay, you go up northwards of 10%?
Yes, because the thing is the kind of the backward integration we are doing, their contribution is yet to come.
Okay.
Their contribution will start coming from FY27. Right?
Oh.
So that will be the big benchmark for us.
So
And
net
that
profit margin northwards of 10%,
yeah, it will increase.
close to 12%, 13%.
Close to 12-13%.
We love it when the CFO is so confident and puts his neck out there. Just on your operating margin figure, sir, the figure we have is 16.7. You're saying 18.5. You're taking other income into account as well, which
And this is other than the other income.
which was slightly higher this time. I think
Yes.
20 crores.
Yes,
So
that's right.
that goes off, of course, next time.
Yes, that's right.
Okay.
That's right.
All right. All right. Thank you so much for coming in and speaking to us.
Thank you very much. Thanks.
This
It's-
morning, Transformer and Rectifiers. And confident CFO is always a good sign for the street.
Because I'm confident because I'm also aware about the operations. So
No, of course.
That's,
Of course.
that's the thing.
No, but of course, you're in the best place to. That's why we're saying from the horse's mouth.
Yes.
Yeah.